Let's move over to BlackRock and talk about the Coinbase integration that happened last week. Now they're allowing a private trust for Bitcoin, direct exposure for clients who want to pick up more Bitcoin while it's cheap. This news came out this morning, also with a slew of other information on BlackRock's interest in the space, including tokenization and some other projects. It's a huge change for the $10 trillion asset manager, which to date has not really been interested in anything with Bitcoin, besides maybe picking up a few stocks related to the industry here and there. In fact, a lot of people have thought that they've been pretty anti-crypto because of ESG concerns. But after the Coinbase news last week and now this direct exposure, seems like they really are chugging more into the crypto space, even though we're going to a bear market. Adam, I'll throw this one to you. BlackRock is, it's BlackRock, right? Everyone knows them, a household name at this point. A lot of people invest with them or through a fund or a subsidiary of theirs. In fact, that they're getting into Bitcoin and have like this direct exposure, it's not only competition for the space, but it tells you, I think, where a lot of these asset managers are going.
I think what it really shows you is it shows you that the era of just sort of ignoring it and calling it things like rat poison is pretty much over. And you are credulously believing them when they say that they are not currently or were not currently invested in cryptocurrency early on. The thing to keep in mind with all of this stuff, and we'll talk about this more in the next topic, so I won't go too far down this rabbit hole, is that the companies and the individuals who benefit from the way that things are have no incentive to like something like cryptocurrency, and every incentive to do everything they can to scare as many people away from it and just slow down trajectory as much as possible. So there's what they tell you they're doing, and then there's what they're actually doing. So the fact that they're actually now telling us that they're doing this indicates that they see that it's actually hurting them not to. It's hurting them with their clients who are interested in these things and who don't really understand the hostility that's coming to them, given how well they've been performing as an asset class over the last dozen years. So I mean, like that's the challenge that a company like BlackRock faces, is they very much don't want anything to change. They're the biggest asset manager in the world. How can they get any better? The only thing that they can do is lose. And so any change represents a negative change for them. And this is them positioning sort of both from a narrative standpoint and also from a financial standpoint, to take advantage of this in the ways that they can, given that now it seems inevitable. That's at least my read.
Yeah, my take is not hot and not original. I've said this before when we spoke about BlackRock. I think this is just a really bullish sign that given the recent regulatory scrutiny, given the downturn in the market, the fact that we have institutions like BlackRock that are releasing news like this is just incredibly bullish for me. I want to read a quote from the article. It says, despite the steep downturn in the digital asset market, we are still seeing substantial interest from some institutional clients in how to efficiently and cost-effectively access these assets using our technology and product capabilities. So to what Adam was saying, I just think they can't ignore it anymore because it just wouldn't make business sense. When you have people knocking down your door and asking about these assets that are outperforming the assets that they've traditionally invested in, I think you have to listen or it just doesn't make business sense anymore. But Will, I'll toss it back to you.
Yeah, the thing I want to attach onto this is the Coinbase angle, right? So Coinbase is working with BlackRock, which was huge news for Coinbase after a slurry of bad news from Coinbase, including the layoffs, where they laid off about 20% of their staff, about 1,000 people. And they had some really rough Q2 numbers. They had a lot of issues with the platform. Bad news. But then this BlackRock thing came out and it's huge, right? This is biggest asset manager in the world. The fact that they're working with them definitely pumped the stock. I think it almost hit $100, which was a 50% off or 100% off the bottom lows in Q2. But now we see reports that they're being investigated by the SEC for the listing processes. That was reported about 2 or 3 weeks ago. And we have disclosures in their Q2 numbers that is indeed accurate and true. What are they looking at? They're looking at the token listing process. That comes after an insider trading case where the Treasury, I believe, or someone can correct me if I'm wrong, maybe it's just the SEC, going after Coinbase for at least one employee who was insider trading on the platform. He was in charge of token listings and was using that information to make themselves a decent amount of money. So we get a mixed bag here of information. My personal take is that it'll be okay. Like, we'll get more clarity on what tokens are okay and what tokens are not okay. And the SEC is definitely going to have a uphill battle here because they're choosing to go after an exchange instead of these individual projects for what is a security and what is not. But Adam, I want to throw that topic over to you, get your take on it.
I think this is just the path of least resistance for the SEC, honestly. When we're talking about these charges, and the charges were brought independently by both the Department of Justice and by the SEC, so separately. But the reality about those charges is that the SEC is using this as a way to backdoor a case for why most crypto assets are in fact securities. And if it's worth keeping in mind that the SEC's mission, at least nominally on its face, is to protect investors, right? Like that's the reason why they exist. That's the point. Okay, so if you had, as the SEC 7 years ago, said all tokens are securities, then at that point you would have stopped the ICO boom. You would have stopped everything that's happened since then, because these tokens, if they are registered as securities, cannot trade at all in the way that they do, cannot be used at all in the way that they do. And you would have really cut that off and people would have been protected. Making that determination today is a lot like saying, well, I know you've all been investing and buying all of these things for years, but we've decided that in order to protect you, what we're going to do is going to crash markets forever and make sure you lose all of your money by making these securities something that you and nobody else can legally own, except under very specific circumstances. So, as much as I would love regulatory clarity, we've kind of passed the window on a lot of this stuff. And the idea that things that have gone before would not be grandfathered in, much to my chagrin, again, like I'm not a fan of these projects, but to not do that seems like it runs so counter to what the mission of the SEC is, at least what we're supposed to believe it is, that I just don't understand how they could possibly do that. And yet, this investigation into Coinbase is exactly that. And the fact that it's a publicly traded company means that they are someone they can go after, whereas a lot of these crypto projects, that's not really true, whether they're just not domiciled in the US or whether they're completely anonymous. So to me, this is, again, this is the Fed, this is the SEC taking the easy path to do the wrong thing that it already wanted to do anyways. And I wish that it wasn't this way, but it certainly appears to be the reality of our situation. Will, any final thoughts? Oh, sorry, Jen.
Give it to Jen for her final thoughts.
Just did a deep breath there. I was frustrated when I read the story. So I went to go and read Coinbase's guide for listing assets. You know, we've spoken so much on this show about all of the random assets that have popped up on Coinbase. So I went to go take a look and it looked quite comprehensive. Now, whether or not the process that happens internally matches that guide that's been published publicly, whether those two match is yet to be determined. And so I can understand why the SEC would probe this. Unfortunately, I wish that they would make a framework and requirements that any exchange could reference to list an asset. And I think it's unfair that they are now probing Coinbase to find out how they're listing the asset to, you know, get this clarity. But really all they're doing is going in there. They're probably going to find them. They're going to enforce some obscure law. And we're still not going to have clarity in the industry because they're going to do the same thing to another exchange and maybe come out with a different outcome. So I think that they need to really start with the framework as to what they think a security is and what they think should happen when an asset gets listed on an exchange, and then do these probes so they actually have something to compare what's happening against. But Adam, I will give you the final word.
Yeah, just real quick. I think that's exactly what they're trying to avoid, actually. If they were to make rules, then the way that these regulatory bodies have to work is that they go through a rules-making process that necessarily has public input, and that necessarily has commenting periods, and that necessarily has them having to explain, frankly, the logic of why they believe the thing that they do. The SEC appears to have decided that that is not the way that they're going to do it, and instead what they're doing is they're just trying to legislate. Effectively, they're trying to legislate by nature of going after these criminal actions, right? And then to say, okay, now we've set a precedent that says that our existing rules, which we don't have to get approved by you and which don't really apply in most circumstances relative to how these technologies work, this shows that this is how we can act, and that everyone is supposed to just read the tea leaves and figure it out. Really what they're trying to do, in my opinion, is they're trying to slow things down. They're trying to make it so that only bad actors will build projects, because good actors who need clarity to do things the right way simply don't have it. And that's been true throughout the entire life cycle of crypto. So it's a very frustrating situation, I think, for a lot of us who really, again, like have spent years and years of our lives attempting to help cryptocurrency happen in a way that is compatible with the existing system and where it can fit into the existing laws. And the existing laws in the existing system just have demonstrated at every course that not only do they have zero interest in allowing that to happen, but they're actively hostile to that outcome, actually.